I greet you all and welcome you to the Manifested e-learning platform. In today's lesson, under the topic Role of Accounting Officer in Management of Public Funds, we are going to study the financing and operationalization of public funds in Kenya. These are two things: financing and operationalization of public funds. Now, the public funds in Kenya, established by, as we saw earlier on, the Constitution and the relevant legislation like the Public Finance Management Act, are the lifeblood of government operations. Their financing and operationalization are governed by strict rules and procedures aimed at ensuring accountability, transparency, and the prudent use of public resources. So let's begin with the financing of public funds, which I've said these two, financing and operationalization, are the lifeblood of government operations. The government cannot deliver services without finances. So the financing of public funds in Kenya is derived from various sources which are collected and channeled into the appropriate funds as mandated by law. And this source could be tax revenue. One source of public funds is tax revenue. Revenue from taxes. This is the primary source of government revenue. Taxes collected by the Kenya Revenue Authority and other designated bodies such as the income tax, the value added tax, the customs duties, and the excise duty are paid into the consolidated fund at the they are paid into the consolidated fund at the national level. So we have tax revenues. Then we have non-tax revenues. Tax revenues have given examples: VAT, customs, excise, income tax, and all that. Number two, we have non-tax revenues. These include fees, charges, fines, licenses, and revenues from government services and investments. And these revenues are also channeled into relevant public fund, primarily the Consolidated Fund for national governments and the County Revenue Fund for county governments from sources like rates, single business permits, cessation of services. Those are paid into the County Revenue Fund. Non-tax revenues. 3, grants. Both national and county governments receive grants from development partners like the bilateral and multilateral partners and other level of government. So these grants, whether program support or for specific projects, are paid into the relevant national or county public fund unless specifically excluded by legislation for a dedicated fund. Another source of financing is borrowing. The national government can borrow from domestic and international sources to finance its budgetary requirements, and the proceeds from government borrowing are paid into the consolidated fund. County governments also have limited borrowing powers subject to approval and guarantees, and the proceeds are channeled into their respective county revenue fund. Borrowing. Both governments have powers to borrow. 5, other receipts. Apart from tax revenues, non-tax revenues, grants, and finances from borrowing, there are also other receipts. And this includes proceeds from the sale of government assets, dividends from state corporations, and other miscellaneous receipts which are paid into the appropriate public fund. And for the county revenue fund, the main sources of financing are the equitable revenue share or equitable share of revenue raised nationally, which is transferred from the consolidated fund based on the Division of Revenue Act and the County Allocation of Revenue Act and their own sources revenue. We may have specific purpose funds that are established by legislation for particular objectives, like what we saw earlier, the equalization fund, the contingency fund, and various specific sector-specific funds, which receive their financing as specified in legislation establishing the funds. And that will be through appropriations from the consolidated fund, dedicated revenue streams, or even contributions from specific sources. Other receipts. Now let's briefly discuss operationalization of public funds. Operationalization of public funds. Operationalization of public funds. Now, the operationalization of public funds involves the management, the control, and the disbursement of the money held within the funds. And the process is strictly governed by the Public Finance Management Act, and it involves various actors. It involves various actors. All right? And that would include receiving and accounting for revenue. Receiving and accounting for revenue. Receiving and accounting for revenue. First of all, I've said that operationalization of public funds involves the management, the control, and the disbursement of money that is held within the funds. And that may involve receiving and accounting for revenue. Designated receivers of revenue are responsible for collecting public money and ensuring it is promptly paid into the correct public fund bank accounts primarily held at the Central Bank of Kenya. And therefore, there ought to be proper accounting records that must be maintained for all revenue collected. So operationalization of public funds may involve receiving and accounting for money. Now, operationalization may also include the management of funds. Management of funds. Management of funds. Management of funds. And management of funds may be carried out by the National Treasury. The National Treasury, that is one actor. The National Treasury is responsible for overall management of national government public funds, including the Consolidated Fund, Equalization Fund, and Contingencies Fund. And that involves maintaining the accounts, managing cash flow, and also ensuring the security of the funds. 2, we have county treasuries. The county treasuries. Each county treasury is responsible for the management of its county revenue fund and any other county public funds. And that includes receiving and accounting for county revenues and managing the fund's bank accounts. So that is management of funds at the national level and the county level. Operationalization may also involve, number 3, Withdrawal and expenditure. Withdrawal and expenditure. Withdrawal and expenditure. Money can only be withdrawn from public funds with proper legal authorization. First of all, there has to be constitutional and legal authority to withdraw. Constitutional and legal authority. Constitutional and legal authority to withdraw. Withdrawals from the consolidated fund candidates require an appropriation by an act of parliament. Require the Appropriation Act. There could also be constitutional provisions, like for urgent expenditure or pending the passing of the Appropriation Act, or even as a charge against the fund authorized by the Constitution or legislation. Similarly, withdrawals from the County Revenue Fund require authorization through a County Appropriation Act. Another layer of control here is the role of the controller of budget. Role of controller of budget. Now, the controller of budget plays a key oversight role, because no money can be withdrawn from the consolidated fund or even the county revenue fund unless the controller of budget has approved the withdrawal. And the controller of budget's withdrawal or approval is based on being satisfied that the withdrawal is authorized by law and in accordance with the approved budget. Then, still under withdrawal and expenditures, we have what we call issue of warrants. Issue of warrants. Based on the approved budget and the controller of budget's authorization, the National Treasury issues warrants to national government entities, and county treasuries also issue warrants to county departments, allowing them to incur expenditure up to authorized amounts. So the National Treasury has to issue warrants to national government entities. The county treasury has also to issue warrants to county departments, authorizing them to spend the money up to the authorized amounts. So, candidates, just to take you back, operationalization, we said, means or involves the management, the control, and disbursement of the money held. So after the money may be received, the money has to be managed, there has to be withdrawals and expenditure. Then number 4, there is the aspect of accounting and reporting. Accounting and reporting. Government entities that receive funds from the public funds are required to maintain proper accounting records of their expenditures and report on their financial performance regularly. And then the National Treasury prepares consolidated financial statements for the national government's funds, and the county treasuries do the same for the county public funds. And these reports are subject to audit by the Auditor General. And that leads us to the 5th point, which is audit and oversight. Audit and oversight. Now, the Auditor General audits the accounts of all public funds and entities that utilize public money to ensure that resources have been applied lawfully and effectively. And the audit reports are submitted to Parliament and the relevant county assemblies which exercise oversight over the executive's management of public funds. So these are the processes under operationalization of public funds. 1, receiving and accounting for revenue. 2, management of funds. 3, withdrawals and expenditure. For withdrawal to happen, there has to be constitutional and legal authority. The controller of budget has to approve the withdrawal. Then there has to be issue of warrants by the National Treasury for the national government. The county treasury also issues warrants for the county departments to spend money up to a certain limit. Number 4, accounting and reporting. And lastly, audit and oversight by the Auditor General. And the Auditor General, after auditing the reports, the audit reports are sent to Parliament for oversight. So the financing of public funds candidates, you can see, involves the systematic collection and channeling of various revenue streams into legally established accounts. These are the streams of revenue: tax revenues, non-tax revenues. The tax revenues, we said, include the taxes from customs duties, excise duties. We have value-added tax, income tax, corporation tax, and many other taxes. Then another stream is a non-tax revenues. The government also raises money through non-tax means, and this could include fees, charges, fines, licenses, and also revenues from government services and investments. And these revenues are also channeled into the relevant public fund, primarily the Consolidated Fund for National Government Entities and the County Revenue Fund for County Government. For county government, we have rates. They get money from single business permits, cessation of services, and so on. Another stream is grants, borrowing, which could be domestic borrowing or foreign money from foreign sources. Then we have other receipts. So you can see the financing of public finance involves, there is that systematic collection and channeling of various revenue streams into legally established accounts like the Consolidated Fund. While operationalization entails the control and authorized withdrawal and utilization of funds for public purposes, subject to rigorous accounting, reporting, and audit processes to ensure accountability and transparency. That effectively brings this lesson to an end. The lesson was financing and operationalization of public funds. Bye.